5 ways to fail in stock market, because the market is in a critical position. If you need to be successful, you need to follow these 5 points, not only now, even forever, but this is even more critical position. So if you want to follow these points and become a millionaire, please go and check yesterday's video, 5 success points to become a millionaire in life. So hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Stock Market Plan, which will help you to multiply your money by investing in stock market. And today's topic is 5 ways to fail in stock market. Why it is critical, why people are failing? Because you lose money, you should understand why you are losing money. Because stock market is not gambling. Because when I say to my friends and everybody, even now, they say that is stock market not gambling? They will ask me the same question. So if you're following these 5 points, you will for sure fail in stock market and you will blame the stock market as gambling. Okay, so let's look at the first point. The first point is frequent trading. You just get do trading on a daily basis, on an hourly basis, or derivative trading. You do trading on a that is you do it regularly, and in the sense like on a daily basis. For sure, you lose your money in maybe in a couple of months or in a couple of years, and you will start blaming the system as stock market is gambling, because it's not for everybody. Remember, trading is for people who for whom it is a job, and they will do it from morning to evening, or they may be able to allocate time and then they will do it. And if your primary job is working or a salaried employee or a business person, trading is not your cup of tea, right? You should spend some time, allocate, learn a lot, and invest some money, because this is not something like you. If you go to college, you need to give some money, right? That is when you seek, you get knowledge. That is when you get a job after that. For school, 14 years we are studying, then only we are getting something. For 14 years you are paying something. In stock market, are you paying something to learn? Are you getting the learnings from somebody who is good in trading, and are you practicing it? You will get the data, you will get the knowledge, but are you practicing it? For that also you may need to incur some money. This is the reason most people lose money in trading. So that is the reason I do a webinar on stock market fundamental analysis, where more than 99% you will get success, because you will analyze the company, you will get the conviction in stock market and in that particular company, and then only you will invest. Okay, if you are interested, please check the description to attend my webinar. And the second most important point is, all these are difficult things. I don't know to trade. I don't know to analyze the patterns. I don't know to analyze the company, but I want money. And what you people do automatically, you'll just go and check the SMS tips, what you get in the mobile, or you follow the email tips, what is coming over, and then you just seek your neighbors, friends, and whatever these people are doing. You'll just get the data. You'll try it. Maybe sometimes you will be successful. Sometimes you will incur losses, and finally say that I don't make money in stock market and stock market is not working for me, right? So this happens for everybody. And the third most important point is emotional bias, meaning you'd have bought some stock, holding it, and after some time you feel like market has gone down, market is going down, and your particular stock is coming down by 10%, 15%, 20%. You'll feel like, oh my god, my stock is going down, my portfolio is going down, and it is loss, and should I sell it off? And you will sell it off, because unrealized loss is 20%, and if the company is good, it will automatically come back, because if the whole stock market is falling, your stock may also fall if it is the most profitable one. So the point is, have you analyzed the fundamentals of the company? In that scenario, you can hold on to your stock for a longer period of time. So right, so the most important thing is emotional bias, which is difficult for many of the people to do it, and without an expert help, it's really difficult. That is the reason many failures are there. If during bull rally everyone can be an expert, but during when the market is correcting or when the market is becoming flat, that is where you will feel the pinch of it. What if my portfolio is becoming negative by 20-30%? And Warren Buffett and Charlie Munger used to say that even if our portfolio goes by 50%, will be fully confident, because they have the money to pump in to buy more, and they know the conviction in that particular company. So that is what they will do most of the times, right? Even they may go wrong, but the point is they have that conviction in that. And the fourth point is no fundamental checks. Because the reason is that you would have bought stocks based on, as I said, your friends, neighbors, whomsoever are done, and you didn't check the fundamentals of the company, or you forgot to check one of the most important fundamentals, or any important update which is coming in the next month or immediate quarter, because that is a critical factor. Because charts pattern everything, it may not say you, But if there is a one negative news, that will affect the pattern, that will affect the way the stock is moving ahead. All these are really critical points to check. And if there is a huge debt, and don't oversee the debt, because most of the time people oversee the debt, seeing that debt is needed for companies growth, but how far the debt is needed? Is it like within a limit or more than that? Most of the companies which had failed in the long run because they had debt which they were not able to manage. We had a huge lesson in 2007 and 8 where most of the construction infrastructure companies had expanded like anything, but after, as the debt was expanding, they are not able to manage, and most of the companies had failed, and still those companies are in between 5, 10, 20, 30 rupees still almost after 14 years. The people had invested when it was around 300 rupees or 400 rupees, but still it is within the limit, right? Finally, the last point is short term view. What is a short term view? Having a short term view like stock market is for today or just 3 months, 2 months, swing trading for a month. But the point is, remember, stock market is not for short term, it is for long term, at least for 1 to 2 years or 3 years. Remember, when you're investing in real estate, you won't think like 3 months or 6 months or a day. It will always about at least 10 years as an investment. At least you'll say it as an investment for my kids' education. I'll put it for 15 years. I'll put it for 20 years. It is for my retirement, right? All these, and it may be for lifetime also for majority of the people. But when it comes to stock market, you will always see that why do you want to see it as a 1 day 2 day affair? It should be for long term, right? Have a long term view. That is where you will always be positive. That is where you will get the result, meaning stock market growth. You will become a millionaire over a period of time. That is what great investors are doing it. And if you are able to follow this, you will never fail in stock market, or else the short term will view will bring down your portfolio and you will fail in stock market. So today we had seen about 5 top reasons where common people fail in stock market, and please do follow it. The frequent trading, going after SMS tips or other tips, emotional bias which will come into picture when the bull rally is stopping, and not checking the stock fundamentals, and finally the short-term view on the market. Have long-term view, automatically you will see the result showing in your portfolio. Thank you so much for watching. Please share this video with your friends who are always cribbing that I'm losing money in stock market. Please go and share them with them. Thank you.